What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a very interesting day in the stock market and there's a lot to cover tonight. So let's jump right into the charts and first up we'll take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we see SPY closing down about 1% today, and at one point we were trading over top of the upper Bollinger Band on a really nice open up. You could see this is definitely a bearish looking candle because it does engulf the last candle on this chart. Now normally when we get a candle like this, it is a warning sign and it definitely means there's a lot of people dumping out of their positions. So remember we did get 3 price action closes over our previous price target, which was 418.50, which did tell us to expect to see the next price target up here at 423. We did get very close to that level, but we have yet to hit that level and it's to be determined if we are going to hit that level. Right now we can see this bearish engulfing candle did close below that support level at 418.50 and it did close just below the 5 EMA. So as far as the price action goes, there's still nothing completely to be concerned about because we're still trading over top of a positive sloping 20 simple moving average. Looking at the trend, we still see a bull trend, but we do know that the bullish trend is going to be at risk on a SPY close below 416.50, which is right at that 20 simple moving average. Remember the previous critical support levels are 415 and 412, and the 50 EMA is all the way down at around 405. So there's plenty of downside risk if we do start closing below 416 on SPY. Remember, one day does not set a trend, so even though this is a very ugly and very bearish looking candle, it doesn't mean that SPY is going to become bearish just in one day's worth of price action. We need to watch these critical support levels very closely and pay attention to the trend. So for the time being, nothing has invalidated the upside price targets of 423 and 427. Now with that being said, if we do start closing below critical support and start losing the bull trend, those price targets will be invalidated and we're no longer looking up for more upside. So this is a very critical moment in the stock market and we still do have a Bollinger Band squeeze on SPY, so we could still see an expansion of these Bollinger Bands and a monster move in either direction. So we always need to protect our risk and we need to understand that we're trading at all-time highs and this is not the time to be over leveraging your accounts. You want to have cash when we're near all-time highs because there's always the chance we get a major stock market correction. Remember, this is a major wave cycle that we're completing here and we are getting very close to potentially seeing a very critical market top. So upside price targets are still 423 and 427 for the time being, with critical downside support which is going to be right around 416, 415, and 412. Remember, below 416, we need to get a lot more cautious for the potential of losing the bullish trend. Alright, next up is the NASDAQ 100 triple Qs, and we see the triple Qs also having a very bearish candle today, even though the triple Qs are in a different boat than the SPY. On SPY, we're near all-time highs, but on the triple Qs, we're not, and we're already seeing a sector rotation out of technology. So on the triple Qs, we went down over 2.5% today, and we did finally get a price action close below that 50 EMA and also below our support trend line. So that's double bad news for the bulls because the price action not only broke the upward trend, but also closed below critical support at the 50 EMA, which was right around 329. So remember, on the triple Qs, we do have a price target up here at 350, but there's one very important thing you need to remember on that price target. I'm going to go ahead and turn on the wave count here, and you can see that wave 4 here cannot go much lower without invalidating this Elliott wave count. If wave 4 does go below the top of wave 1, that does invalidate this wave count, and that would mean the triple Qs are not going to the price target at 350. So the top of wave 1 is right at 324.20, and wave 4 is very close to invalidating this count. So watch this critical gap fill right around 325 very closely because that's going to be the key price action going into tomorrow. You can already see that the triple Qs are down off their highs, so this is becoming less risky the lower the triple Qs go. But also do remember that if this wave 4 does invalidate this wave count, it could mean the triple Qs are going into a bearish trend and a bear market. So we still need to know our risk very well, and it is defined on a close below 325. Remember, we still have gaps to fill down here, and if the triple Qs go into a bear trend, we could easily fill the gaps at 321 and 315, and then possibly even continue to head lower after that. So take this seriously because tomorrow is going to be very critical, and we should be testing this critical level as soon as tomorrow at this rate. So understand why this wave 4 support level is going to be critical, and if we do close below that level, we will no longer be looking for upside price targets and we'll actually be looking for downside price targets. So critical resistance on the triple Qs is going to be right around that 50 EMA at 329, and do note that the 20 simple moving average is all the way up here at 336. So we'll have critical support at 334 and 336, and we would need to get back above 336 to start going back into a bullish trend. So the bulls have their work cut out for them on the NASDAQ 100, and it could be possible that we see a bear raid on a close below 325. Remember, downside support levels on a close below 325 are going to be the gap fills below at 321 and 315. Remember that I said these gaps would not likely get filled until we go into a stock market correction, and that's the path we're currently heading down. So this is definitely a tech correction. Even though we don't see a stock market correction across the board just yet, we could be seeing tech leading the way and starting to go into a correction before the rest of the market. Also remember, as far as the trend goes on the triple Qs, we don't have a bull trend or a bear trend. These moving averages are not fully stacked to the bear side or the bull side, so right now the critical price action is the most important thing to pay attention to. Next up is the Dow Jones, and the Dow Jones actually had a very bullish day for most of the day and did exceed our price target at 347 and get to our next price target at 350. However, those gains did not hold up, and you could see the Dow Jones is trading outside the upper Bollinger Band, and it is due for a cool off. Right now, the Dow Jones could have support at 347 or our previous support level right around 341. The 20 simple moving average is right around that support level, and we would need to see the Dow Jones start breaking down below that 20 simple moving average to start reversing the bullish trend. So do note that the Dow Jones is looking very bullish because the price action is well above the 5 EMA and still in a very strong bull trend. The price action really didn't come that far down from the highs, and this was really just a retracement from getting way too far extended and going way too far way too fast. Remember, anytime we see parabolic moves like this anywhere in the market, it's not sustainable, and it's very likely they're going to retrace that move. So we would like to see the Dow Jones get back more on this 45-degree path that it was on, and it does mean it could cool off and go sideways from here. This doesn't mean it's time to short the Dow, because as you'll see later on in my analysis, the Dow Jones is one of the strongest sectors right now, with a lot of the strength going into the financials and the industrials. So do note that the Dow Jones is due for a cool off, but it's definitely not anywhere near a bearish pattern, and the price action and the trend in the Dow are still very bullish. Next up is the Russell 2000, and we see the Russell 2000 also going down about 2.5% today and getting all the way to the bottom of this wedge support, which is right around 219.50. Just like on the triple Qs, the Russell 2000 also closed back below the 50 EMA, and we could see there's no bullish or bearish trending on the moving averages. So right now the price action is king, and right now the price action is saying be cautious on the Russell 2000. We closed below the 50 EMA, and on a break out of the downside of this wedge right around 219, we could go back down and retest support levels at 215 and down here around 206. The upside resistance levels are going to be the 50 EMA right around 221.80, the 20 simple moving average at 224, and then we have resistance at 227 and 230. So you can definitely see some weakness in the Russell 2000 and the tech sector today, and the only question is, are they leading the way into a major stock market correction and the S&P 500 and the Dow Jones are right behind? Or are they just lagging sectors and we're seeing money leaving these sectors and going into the stronger sectors? Only time will tell, and that's why we need to watch the critical price action. Next up is the ARKK ETF, which got absolutely obliterated today, going down over 5.2%. ARKK is outside the bottom Bollinger Band, and it did break down below that support level at 106. Remember, ARKK is already in a bear market. All of the moving averages on ARKK are stacked to the bear side, and the price action is below all of the moving averages, which does define that ARKK is in a bear market. And also remember that this ETF has not formed a higher high all the way back since February. So this ETF is definitely in a downward trend, and it's blasting through support level after support level. The next support level on ARKK is all the way down here at 96, but we could have a dead cat bounce before we get down there. So remember, on a dead cat bounce in ARKK, it's still possible it's going to start retracing back higher and then eventually finding resistance and continuing a downward trend. Remember, the trend is your friend, and right now the trend on ARKK is still in the downward direction. So look for upside resistance at 106, 109, and the breakout level right around 116, with the only downside support level I want you to pay attention to right now right around 96. Next up is the VIX, which is our fear indicator, and we did see fear coming into the market late in the day, and we saw the VIX going up 17.8%, closing at 19.7. Remember, the VIX above 20 will signal that we could be going into that deeper stock market correction. So right now the VIX is still below 20, but obviously that's subject to change at any point. We see the VIX closing over top of the 50 EMA today, and we can definitely see the Bollinger Band squeeze is firing, and we're starting to see the VIX firing to the upside. So anytime we see the VIX firing to the upside, we have to remember that means volatility is coming back into this market, and if we do get into the VIX levels of the 20s and 30s, we could see massive selling across the board in the stock market. However, the opposite is also true, and if we see the VIX going back below 18.2, we could also see a very impulsive rally off of these lows. But right now, do remember that the risk is to the downside because the higher the market goes, the more risky it becomes. And right now, the Dow Jones and the S&P 500 are still very close to all-time highs. So protect yourself to the downside. And remember, this is not the time to be over leveraging and taking on more risk in your accounts. Next up is gold, and we see gold blasting through that price target at $18.29, and it does still have that full bull trend as it continues to hike up higher. We will have support at $18.29 with the next price target above at $18.76. Next up is silver, which got to our price target for 2 days in a row at $27.60, but now cooling off and going sideways. We could have support at the 5 EMA at $27 and the support level right around $26.50. If we break and close over $27.60, the next price target on silver is all the way up here at $29. Next up is Bitcoin, which is currently down about 4.5% and trading right on top of that support level at 55,600. Bitcoin still doesn't have a full bull trend because we don't have the 20 simple moving average crossing back above the 50 EMA just yet. So remember, the critical support level on Bitcoin is 55,600 and the critical resistance level on Bitcoin is going to be right around 61,000. Below this support level, Bitcoin will start breaking down and we could be retesting support at 48,000 and 45,000. On a break and close over 61,000, Bitcoin's upside price targets will be 67,000 and 75,000. Remember, Bitcoin has a lot of risk in it, and even though the crypto space is doing very well, it could be a blow off top, which could mean that a huge wave of parabolic selling is coming right behind. So know your risk in the crypto space and understand that nothing goes up forever, and the faster something goes up, it usually means the faster it's going to come down on the other end. So don't get burned and make sure you're managing your risk. Next up is Amazon stock, and we see Amazon getting obliterated today, going down over 3%. Amazon did close below that support level at 32.09 and did close outside the lower Bollinger Band. So Amazon is coming down from the highs and it did close below the 50 EMA today. So overall, this was a relatively bearish day for Amazon and we still do see more risk to the downside from here. So be careful on Amazon because right now it's trading below all of my support levels and we really don't have really strong support until we get all the way back down to about 30.50. So this could still be a false breakdown. We need to see one more day's worth of price action. But do know that risk is increasing in a lot of these stocks as they continue to blast through support levels. The upside resistance is going to be 32.09, 32.60, and then the breakout level right around 33.50. Next up is Tesla stock, and we see more of the same with another stock getting obliterated today, with Tesla going down over 6.4%. Tesla already did break out of that wedge a couple of days ago, and that was the warning sign that we could be going down for another leg lower. We did see a retest of that breakdown as resistance, and we did break below that support level at 670, which means Tesla is likely going down for the next leg lower, which is right around 618. So we do have support levels on Tesla at 618, and if that level breaks down, we could be going back down into the 550s. Do note on Tesla, it's very close to going into a full bear trend because that 20 simple moving average just needs to cross below the 50 EMA, and then Tesla is officially into a bear market. The price action is below all the moving averages, and the trend is slowly but surely building up to be fully bearish. Upside resistance on Tesla is going to be 670 and the 20 simple moving average at 704. Next up is Apple stock, which again got obliterated today, going down over 2.5% and closing below support at 128. The next support level on Apple stock is going to be right around 126, and below that things get dicey and the next support level will be all the way down here at 119. Apple did close below the 50 EMA yet again today, and it did break down below a critical support level. So Apple could be at risk for going lower, but again, watch these price action levels going into tomorrow because we could possibly get a bounce off these levels and break back above. However, understand that risk is still to the downside because we're below the 50 EMA and a lot of these stocks do look like they're rolling over. You could see Apple's 20 simple moving average is now negatively sloping and it could be going down, getting ready to go back into a bear market. If these support levels don't hold up, do remember that a lot of these stocks could be going into deeper corrections. Next up is the financial sector, which was relatively flat on the day, still closing over top of the 5 EMA and still holding on to the strong bull trend. Right now, there's nothing in the financial sector that signals that there could be more weakness around the corner because we're still well above the 5 EMA. Next up is the industrial sector, which inched up just barely today, closing outside the upper Bollinger Band and well above the 5 EMA and also holding on to the very strong bull trend. The industrial sector also looks very strong, just like the financial sector. On the healthcare sector, it went up 0.13% today, closing well above the 5 EMA and still holding on to the bullish trend. On the energy sector, it was pretty flat on the day, closing near the upper Bollinger Band, well above the 5 EMA and still holding on to the strong bull trend here. So going back to the S&P 500, you can still see that there are bullish sectors in the stock market. The financials, industrial, healthcare, and energy sector are still looking very bullish, and that's why we still see a lot of strength in the Dow Jones. Remember that the S&P 500 is over 30% tech sector, so this tech sell-off is stopping SPY from going higher. A lot of the selling in SPY today was due to the tech sector sell-off, and we also still do see weakness in the hyper-growth stocks that are in the ARK ETFs. Remember, the Russell 2000 has a lot of those small cap stocks, and those are the stocks that are getting beat up the most right now. So remember, these sector rotations are completely normal for the stock market, and a lot of those stocks just went way too far, way too fast, and they were due for this bear market and they were due for this correction. So right now we need to watch SPY very closely because it does represent the health of the market much better than the rest of the indices. Right now SPY is still bullish, even though it did have a very bearish candle to close out the day, so we need to continue to watch the critical support on SPY at 416 very closely. Remember, the VIX is also spiking, which does mean that fear could be coming back into this market, and if we do see a high VIX, that could mean a lot of volatility and it could signal a major stock market correction is already here. Remember, we did not yet hit the price target at 423, but we did get very close, and it is possible we did see the top. I'm not saying we did see the top, I just want you to be prepared and I want you to manage your risk, and I want you to treat the market with the respect that it deserves because it can be very brutal. The market could see massive selling and we could easily go through a 10 to 20% correction if this is indeed going to be a stock market correction. So prepare accordingly and make sure that you have a plan and that you're sticking with it. Also remember, on the Stocks Channel Discord, I'm giving you intraday updates and analysis to help you navigate this market and stay on the right side of the trade. I'm also bringing you new trade ideas weekly, so if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description of the video. Alright, next up was our trade idea Shopify, and we did see Shop closing 2 days now below that critical level at 1098, which does mean that it could be coming back down to 1026. So we're going to go ahead and dismiss this stock as a trade idea because it could be going much lower and we want to manage our risk and cut our losses. If you're still interested in Shopify, the critical support level you need to watch is going to be all the way down here at 1026. If that level does break down, Shop could be going much lower, but we did see that level acting as support in the past. So watch that critical support level very closely and do know that all of these levels I've given you above could still be resistance at 1098 and right around 1165. Next up is our trade idea Disney, which went down 0.29% today. If I switch Disney over to a 1 hour chart, you could see that it did break out of this upside resistance trend line and it did backtest that level as support and it did bounce. Right now we see Disney cooling off and it could be getting ready for another leg higher. So the critical support levels on Disney are going to be the trend line breakout at 183.60 and our critical support levels are at 181 and 178.80. Remember, on Disney, our risk is defined by some percent close below support at 181. Upside price targets are still 188, 191, and 193.8. Remember, Disney does have earnings coming in this week, so if you don't want to hold this stock through earnings, make sure that you sell your trade before the earnings report on May 13th. So thanks for watching, everybody. Remember to be very nimble and very cautious in this market, and as always, I will see you in the next episode.